I mean, these are the people that we have in charge of preserving our standard of living and protecting the purchasing power of our retirement funds and our dollar, our currency. These are the people. I mean, that came out of her. So it's not, what she should have said is, I know inflation is way higher than our target, which is an asinine 2%, which our target should be 0. And I know it's going in the wrong direction because the core rate of inflation is rising, but that's bad enough. What's really, really bad is the level of prices has destroyed the middle class, and we need to get prices down, maybe slowly, but the level of prices, in other words, we need deflation to restore the consumer's purchasing power. We're going to try to do it as fast as we can and as safely as we can. But there's going to be pain in Wall Street and in the real estate market, and maybe some banks will have problems too. But in the long run, that's what we need to do. She didn't say that. She said, hey, inflation, if you count everything that's massively important to people who aren't spirits and who don't live as cave people, if you don't count that, then we're back to around 2%. So hey, let's cut interest rates and see if we can get inflation going a little higher, a little faster. That's my, I'll leave you with that. That's what I mean. This is the most odious institution ever created by a republic, a free republic. What Elon Musk could do is, and he's talked about, I haven't heard his exact idea, but he's talked about like maybe creating a model for the Fed so we don't need all these people and all these, hundreds of economists and whatever doctors at the Federal Reserve, doctor of an economist. Listen, here's what you need to do. Let's look at base money supply, high-powered money. We need to have that fettered and controlled. Let's make that grow commensurate with potential GDP growth, which is 2%. And then we can link that back to gold because mine supply of gold is about 1% per annum, 1.5% per annum. So the base money supply never grows like by $4.5 trillion in a matter of a few months, like it did in the COVID era. And then we let the price of money be a function of supply and demand. So the supply of savings versus the demand for money. Oh, wow. What a novel idea. So he's looking at lagging data that is faulty, that gets revised by like massive revisions. And I think my model is a little better than his. It takes out all of the human error.